Hi folks, I'm Will Bridges from 123 Trade. In this video, we are going to be doing an update on the FOMC statement that came from Jerome Powell here today. There's going to be big implications on the analysis of the US dollar, gold, silver, oil, the stock market, pretty much everything, because the Fed is actually more bullish than they led on a few days ago. They are looking to raise rates a little bit sooner and more often than they had previously spoken about. So I'm going to show some technical analysis on the chart. We're going to read a little bit of news. I'm going to bring you guys up to speed on what happened with the Federal Open Market Committee announcement from the Federal Reserve in the US here today. If you guys want more content like this, press the thumbs up button, like the video. That's the best way to support us. If you subscribe, ring the bell. This stuff is going to be time sensitive. I'm going to be showing you guys some price targets and some analysis on some live charts today that you're probably going to want to see, well, sooner rather than later. So ringing the bell is a good thing. You'll get the message directly from the good people at Google as soon as that happens. Do need to cover our base. Everything in this video will be for educational purpose only. You do with the information what you think is best, but you do have to risk it to get the biscuit. No such thing as a guaranteed trade or investment. If you guys are looking for more help, more information, feel free to visit our website. There are lots more videos on our website, on our YouTube page. There's also $22,000 worth of free stuff that you can get for funding your account. If you're already a client of ours, if you want to reload your account and get more cool stuff, then send us an email to brokers@123trade. And we'll talk about it, see what we can't get you for free. We've got some pretty amazing stuff. Like I said, up to $22,000 in tools and education to give away for free. So let's go ahead and get to the cool part, people. Okay, and actually this is a chart. I want to show you guys a couple news articles here first, a couple other tools here. But the US Fed, they held the rate today. So they did not raise interest rates. They did not hike the rate, which is, as far as most people are concerned, if you want to buy a house or you want to take on any kind of debt, loose money is good for you. Okay, so as an American myself, I'm happy that they kept the rate low. That said, inflation is getting high, which is why they more than likely came out and said that they're going to raise rates twice before the end of 2023 versus just once by the end of 2023. So they are making a little bit more of an aggressive move. They're blaming it on the fact that the economy is opening up faster and more smoothly than they had anticipated, which I think is a joke because we missed the jobs report number by 700,000 2 months ago, and we missed it again last month. So it's very much a kind of a lie in my opinion as far as the reason why they said that they moved up this time. The reason why they moved up the date is because inflation is too high and they need to curb it, and the only tool that they have is to either raise the rate or tell us they're going to raise the rate. So if you guys can imagine, even though they didn't raise it, they did show a more bullish stance. So what did manifest itself on the chart, we're going to see here in a second, and I want to show you guys, let's get back over to the calendar on here. And crude oil inventories actually came out strong, negative, down 7.4 million. So crude oil inventories are actually low for this time of the year. So there is a little bit of a supply squeeze that I guess a lot of people in the oil industry are anticipating to clear up sometime within this summer. They're expecting to get back to normal supply. But as of right now, we are a little bit behind as the economy opens up. California is opening up. So New York is also opening up. So there should be a heck of a lot more gasoline getting burned here in the coming days, coming weeks, months, forever, until 2050 when we're allegedly going zero emissions, as was committed to by Joe Biden. So interested to see how that works out, but he also had a federal judge shut down his he was trying to stop new lease agreements for oil, all that type of stuff. There's more information on that all over the internet if you want to Google it. But basically, he was trying to slow down oil growth here in the U.S., and he was stopped by a judge, which is good for capitalist people like me. And otherwise, this rate statement. So if you guys want to get more detailed news on this, like I said, there is this button here. You can go back and you can look at high impact stuff. This is from 2 hours ago, 16 minutes ago. Let's just click on it, see what it has. There's probably a tweet here. Fed policy will remain accommodative even after liftoff. Liftoff will indicate that the economy is doing well. Fed's Powell, before adjusting asset purchases, the Fed would give advance notice. Okay, so they're going to give advance notice if they decide they're going to slow down asset purchases, which that notice is actually going to be a bigger move on the market than when they actually make the change. Otherwise, adjustment to IOER has no bearing on policy stance. 1 to 2 years out, we'll be looking at a very, very strong labor market. So basically, they are hawkish, and more so than they were before. So this is bullish on the dollar. And if we come over to the chart, that's pretty much what happened today. Okay, so this is our daily candle that just closed 2 minutes ago. Okay, so literally 2 minutes ago. This is a big move on the dollar. That's a breakout. So more than likely, we're going to see some, well, at least short-term bullish activity on the US dollar until something changes. And more than likely, that might be another inflation announcement. So if inflation continues to get more and more out of control, this dollar may come back down, or, it's going to be a seesaw. Because if inflation continues to rise, and it might, we are getting higher highs and higher lows on this US dollar, and we haven't had, as far as the Fed's concerned, good inflation in a long time. This could be where we're headed right now with the US dollar. There's also a fib range here to pay attention to. So that could mean short-term dips on pretty much all commodities, anything measured in dollars, as long as this thing is moving upward. And really, this little purple circle, we may be looking somewhere around here, and our dollar index may die somewhere at this fib level above here. So that may be where our level of resistance is. We may be bull dollar until we get there. Okay, so I generally speaking, don't like to make blanket statements, but pretty much everything is tied to the US dollar. So if we go and we take a quick look at gold, our old XAU USD here. Okay, if you guys can see, gold corresponding did fall today. We actually predicted a fall like this a couple of days ago. We were actually talking about a buy zone down here around 1775, I want to say is where we were. I'll go ahead and pull that fib range that we showed here. I believe it might have been yesterday when we came out with that video. If you guys want to check that one out, it is on our website, 123trade.com also. So if you guys want to see any of these other videos I'm referencing, they do exist. But this is really where I was looking at getting in. This is really considered my buy zone down here in this 382 zone, which is more or less where we're sitting right now. And it's kind of a strong move down today. If the Fed had come out and said that they weren't going to be raising interest rates, just like they were not planning on raising them before, then this thing could have taken off like a rocket today. That being said, I do think that since they came out a little bit more bullish, I think we're going to get more sideways movement on things like gold. On silver, we might see the same thing. So this buy zone may actually be a little bit lower. And the reality is the best place to get into this thing, since they have changed their posture, may be more down towards this further zone, with our, our 5-0 being our early place, and we may be a little bit more conservative. I think that there's more room for this thing to come down. We're going to talk more about this on Friday as well. If we take a quick look at silver, get our XAG USD on here as well. Very similar formation here. And I'll go ahead and show you guys what we were looking at on silver as well. And I'll pull the same recent AB boundary that we've got here. Buy zone that we are looking at as of today. I don't think necessarily it makes sense to get in at the aggressive higher red levels of my fib tool here. So I think we're more looking at a somewhat of a sideways move. I think we've got lots and lots of support within this green zone that I've just drawn here below, as far as silver goes, and that's between the 24.8 and 25.6 areas. So about $1.50 shy of where we are now. I'm going to become a much heavier buyer. I do think that they have, kind of kicked the trend down a little bit here for a little bit, but they didn't actually do anything. Remember, okay? So the Fed came out and they said they're going to raise interest rates earlier. We're going to do it. We were going to do it later, but we're going to do it sooner. They still haven't done anything, okay? So I don't think that this thing has any reason to change trend direction altogether, but I do think that it does have some legs to come a little bit lower than it has already. If we move on, we'll go check out oil here as well. Let's go to crude oil, I guess is what it'd be. US oil maybe in here. Here we go. WTI crude oil. Here we go. And oil has been making some pretty powerful moves. We've been talking about this one for a few weeks as well. We've got other videos on that too if you want to check that out on our website. But just to give everybody a quick bird's eye view, 10,000 foot perspective on what's been going on with oil. This price from the bottom here is zero. Okay, here is our uptrend line. This thing has been very strong, and we've recently broken some highs that haven't been broken in years. For example, these here. Okay, these highs happened a long time ago, 2-3 years ago. We haven't seen $72 in quite some time, and I think our highs more recently are even higher than that. If we come in here and we click on this candle here, our high from yesterday, we were looking at, I guess 72.95 was as high as we got before this thing decided to take a break. So maybe we see a little bit of a dip in oil here in the coming days as the dollar decides to make a little bit of strength. And let's go ahead and actually let's get this manual Fibonacci tool on here, see what we got. It does look like we are at our extension level roughly right now at 72. Well, 72.95 was our high, and that actually might be where this fib level lines up, just about 73. Maybe I don't know if I'm perfect on that, but pretty close as far as for government work. So maybe if I want to take a look and see how far this thing is going to dip, let's go ahead and pull a quick fib on this theoretical range. Okay, this might be my new AB boundary, and I may look to start buying again sometime around this either $66 or $67. Really, I'm going to be bullish on oil for a considerable period of time. I think that it may slow down. I don't know if $100 oil is going to happen. It seems like a lot of the oil industry is really kind of slowing down from an investment standpoint. So years from now, there might be a really serious supply issue because investment in oil has gone down to levels that we haven't seen since 2008, as far as new pipelines and new oil rigs, all that type of stuff. So oil should be something to pay attention to here. I'm still bullish, but for the short term, I may actually be quite bearish for the next couple of days, given our big announcement from the Federal Reserve. Them giving us a nice little signal on what they're going to do with the value of money. It's always a fun game to play, but there is no guarantees in life here, folks. So take everything with a grain of salt, but I am going to be continually bullish on gold, silver, and oil. As far as Forex pairs, anything against the dollar for the short term, I am going to be long. We're going to be showing a lot more entries, exits, ideas on Friday in our client-only presentation. So if you have not joined us, if you are not coming to those, and you want to know about something specific, then send us a message to brokers@123trade. We can help you get a trading account opened, help probably save some money on your trading costs, and maybe open your eyes to some cool new stuff. But if you like the video, press the thumbs up button, subscribe, ring the bell if you want to get notifications. There's going to be time-sensitive information in all of these videos, and you want it as soon as it gets on YouTube. Otherwise, we've got lots more information on our website, up to $22,000 in bonuses, people. So you can literally fund a trading account with us that you might save money in your trades with, get free education and software for doing it, and be able to ask pretty much whatever question you want on Fridays. If you don't want to join, I guess I'm sorry. But thanks again for joining. I'm Will Bridges. You guys have a great day, and be good or be good at it. Take care.